weakness, given that it's almost a free fall of sorts. We're now at 95.22 for the rupee, and I think we've fallen further than that. 94.97, we're back at that level of 95, at least resurrected a tad bit from there. But I think we slipped lower than 95.22 as well, just a few odd minutes back. But we've got Naveen Mathur from Anand Rathi joining in the show right now. Naveen, hi, good to have you on ET now. Naveen, why now? One would have assumed after RBI's direction, at least it would have resurrected the rupee. I mean, this has fallen pretty much on day one itself.
Well, thank you very much for having me on this show. When the markets opened today morning, the rupee did appreciate it to an extent of around 1.5% from the Friday close. We did saw the levels of around 93.30, 93.40. But the volatility continues with respect to the Middle East geopolitical concerns. And we expect that the rupee against the dollar would remain highly volatile in the near term. Means although there are clear depreciation bias driven by the US and Iran escalation, the Brent crude oil also sustaining above $110. And even the WTI now is above $100 or so. We are seeing continued FPI outflows to an extent of around 1,12,000 crores for the March itself, which is highest in any 17 months. So I think the depreciation bias is there, but the move by RBI was positive, and we did saw that I would say that inclination on rupee against the dollar in the early morning trades.
Okay, Naveen, I'll just quickly take a pause. I'll come to you with a question, but Ankur here, with regard to the moves on the rupee since the morning. Ankur, what do you have for us?
Yes, we have been speaking to multiple stakeholders to guess what is the trajectory of the rupee, and what we have been told why rupee touched 95 today, despite opening which was actually strengthening of the rupee earlier. One of the point which has been made is that OMCs are continuing to spend dollars regarding the purchase, and this being year end, therefore this last hour movement you would have seen towards 95. So OMCs is one of the reasons why this kind of movement is there. And also there is a chatter that there is some kind of discussion between banks as well as a regulator regarding the circular which has been imposed by the regulator on the weekend. So that is also one of the reasons why this sharp movement is there. And more importantly, banks are also waiting and watching till April 10th. There is not one go kind of a reaction which you will see in the market. So overall, in the morning, you saw a sharp movement to below 94 earlier, and now the rupee has touched 95.
It's a sizable 20 to 40 odd billion dollars in hedging positions that has to be unbound right now. And what our reporter is telling us is that banks are also in a little bit of a wait and watch mode. Naveen, do you sense that because of it being a truncated week, the announcement only coming in over the weekend, do you sense that further strengthening of the rupee may happen in the days to come?
I would say so. I would also give cognizance to what Ankur just said on the call. There might be some discussions between RBI and the banks regarding the notification or the circular, which came out last week. But I would say the dollar would continue to be positive, appreciating. The interest rate cuts are now the story of the past. We would see the interest rate hike that would be positive for the dollar index. And at the same time, what Ankur said, I totally agree with him that the year-end dollar demand from the oil marketing companies and other organizations would also be dampening the rupee appreciation effect on the notification. So I would say that the depreciation bias might continue, but let's see how the RBI and the banks, this particular notification pans out to be till April 10th.
Naveen, I'm curious. RBI has started, it seems, that has started exploring options on how to stem the rupee slide, right? One of those options got exercised, maybe not to very good avail. But what next in terms of what does RBI have up its sleeve? And when, at what point, at what level does it utilize that?
See, I think the RBI, although we are down there on $30 billion worth of foreign exchange reserves, if you see before the month end, the February, the 27th or 28th February, the RBI was holding the forex reserves to an extent of around $728 billion. As per the recent week, the last week reporting, it has come down below $700 billion. So I would say that the RBI has utilized about $35 billion to manage the volatility in the rupee. One of the options was, again, what the notification came in on the weekend to stem the fall of rupee against the dollar. But I would say we are in a very different position than what we were at the time of the earlier 2012 or 2000 unwinding during the great financial crisis. So I would say that the RBI would be looking forward to use as many tools as possible to curb the volatility. But at the same time, the moderation of rupee would largely be dependent upon how the dollar index performs, and at the same time, the Middle East tensions come out in due course of time.
Decide in the scenario where Reserve Bank of India does not give any kind of relaxation to banks, although the discussions are on, do you see that the kind of pressure which is there on rupee today, and that too more of a year-end kind of a thing, from next week onwards, and especially till 10th of April, you see that there might be some trend reversal and the weakening of rupee might be arrested, at least in the short term?
I agree with you to an extent, and that's what I said, that in the start of the trade today morning, the rupee did appreciate it to an extent of around 1.5, 1.6% from the close of last week. So the trend remains positive basis the notification of RBI. But what I'm trying to say is that the long-term trend for rupee against the dollar would be dependent upon the dollar index, the central bank moves, and at the same time, the RBI taking actions in the market to arrest the depreciative bias of rupee against the dollar.
Interesting. Naveen, glad that you could take time out and speak with us right now.